so let's do a quick review here, just to make sure there's no questions about TDI or any of that stuff. So let's see. All right. Well, let's start with this over here. So, would everybody agree that this is divergence, or is this not a good example of divergence?
Yes, I agree.
You think it's a good example? Okay. Anybody else?
Yeah.
Good or bad example?
What time frame is that? Is that 15?
That's a 15, yes.
Yeah.
15. So he's saying basically you have divergence here and then here.
Yeah.
I personally think of divergence as, let's say, something like this. So this is going up here, right? And then this is going essentially down. You know, maybe not from the bottom, but I know we'll just do it from the top. So this one from the top and then this one from the bottom. Does that make sense?
Yeah.
Oh, okay.
Just like if I was doing this one from, let's say, the bottom here or from the top here, then I'd be looking from the bottom to go up.
So basically you're saying the chart should be on the top side and the TDI is going to be from the lower side?
Yeah, well, it's just where price is going, right? So at
Okay.
this particular time here, if you block this out,
Yes.
so if you block this out,
Right.
you know, price is going down, basically, right? And then price is starting to come up. The one is going down, the TDI is going up. The reverse side of that obviously would be the TDI going down, but the chart going up.
Okay.
You know, but still a trend basically. It's almost like when you, and we'll probably see a couple of those examples, but whenever you see, like, let's say a type 1 setup here, but the TDI is like already moving down, you know what I mean?
Mm-hmm. Yeah.
And so that's a good, you know, it's probably a good example because it's going up to make the type 1 setup, but it's already like creating lower lows on the TDI.
Okay.
You know? All right, so let's see, that is this one. This one doesn't have anything. That one doesn't have anything. All right, so on this one here, would you say that this is divergence?
No.
No.
Looks kind of level up top there, basically, except for those two bars that kind of spiked
Right.
up. But
so this right here is not like this.
Right.
Right? So this is, you know, creating lower lows as it's going down. This one is still even, basically. So this and this is not divergence, essentially. What is divergence is this one creating still going up, and this one is already starting to go down. So by the time this second leg here is created, the second leg over here is already a lower leg. You know what I mean? Which is what creates divergence.
Oh, okay.
All right, so how about this one here?
No, the top's level.
yeah, I don't see it.
Yeah, this is a bad example of divergence. Just at the bottom may be divergent, but this is basically still going up. If this was actually like, let's say, if this was creating like lower lows like this, you know, but it's not, it's basically moving straight sideways. So that's not a good example. How about this one? This one looks very similar to the one before.
Yeah, that just looks like a regular W.
Regular
Wow.
W, right?
Yeah.
Yeah. So that's not a good example there. This one's same thing, just
Yeah.
a regular W going up. This is still also going up at the same time. Yeah,
That
so
looks a little better.
yeah, this one looks better because the top is basically still going down, and this one was going up at the time.
Yeah.
So you definitely have divergence there. This one here, good example. Prices was still creating higher highs. This is creating higher lows.
Yeah.
Yeah. This, if you draw the line from actually from here straight down, still not a good example because this is going down, so is this.
Yeah,
All right, how about this one here? This is a type 3 setup. This looks more like a W, right? So here's the thing. If you're going to say that this is a type 3 setup, right, I would want to see the whole thing. You know what I'm saying? So I want to see the entire, like, I guess, type 3 setup showing, because this looks like it's about to go up still. You know what I mean? Or it looks like a W here at the bottom. You see that? So does this one here. So is it a type 3 or not? We don't know because this wasn't like complete. All right, so this one here, the big point is that we're making a W here, US session, and then we're basically making a W on the TDI. And notice how the W on the TDI is basically like this, towards going, creating higher highs and higher lows. And it's not just like an even W or something like that. So that's really important because that tells you clues as far as how the average price is actually moving higher, not lower, essentially. All right, let's see this one here. So type 3 pattern here. Would you use this as a confirmation to enter a type 3 setup? Would this be a confirmation here on the TDI?
Yeah. You got the 513 crossing too.
Yep.
Yeah.
So you got a 5 and 13 crossing. What exactly about this TDI is helping you with this entry of this?
Good morning, guys.
Good morning.
Well, it shows a clear M.
Shows the M.
Yeah, I mean, that's much clearer than looking at price.
Right. And you can see it's basically the first leg over here is basically this here that it's picking up. So, all right. All right, this one here is basically the M on the TDI used as a confirmation. You got that, and you also got divergence too.
Yeah, there's divergence, yeah.
You got that, and then you got that.
And 513. So.
And 5 and 13, yeah. Pins to the 200 here. So you got a bunch of stuff. So that's the kind of stuff you're looking for. The more evidence that you have, the better. Those are the kind of trade setups that you want. the ones that have the most evidence. So if you're looking at 5 pairs, which one of those 5 pairs show the best evidence? Does 3 of the 5 show? Well, if 3 of the 5 show out of the 5, then just concentrate on the 3, forget the other 2. And then from those 3, start picking those 3 apart. Like, okay, what evidence does it actually show? Can you tell where you are in the cycle, on the weekly cycle on that? Can you tell what level you are on that? You know, so all those things. So out of the 3, which one of those 3 can you identify all these different aspects on? Can you identify the pattern, the timing, and the cycle on? And then those are the ones that you actually take. All right, so I think we already saw this one. This one here, type 1, set up off the 200 EMA. You can see here we have a nice little W here on the TDI as well, coming back up. This one here, divergence, and also type 1 setup. Also all the way up at the top, creating an M here. Nice little setup there. Now here on the TDI, you can actually see the M, and it's already been formed. It's already on its way down, way before this is even ready to be traded. Now it's picking up basically the first leg of it being this here, and then coming back up, and this being the second leg here, and then working its way down.
So Mark, what about a situation like that? I mean, let's just say you have the TDI looks pretty strong, but you're kind of a ways away from a 513 cross. Should you always wait for the 513? I mean, sometimes, I mean, these things can run straight down and be done.
Sure.
Times,
yeah, they can run straight down. So I guess for you to be able to do that and get in, you know, before any cross or anything like that, I mean, you got to think about it. Can you identify the pattern?
Mm-hmm.
Can you identify where you are in the cycle? Can you identify what level you're on?
Right.
I think if you want to take those kind of trades, you have to know the cycle and you have to know what level you're on.
Yeah.
Because then if you're just taking them, you're just taking them blindly.
Yeah, it's like a gamble, right?
It's like a gamble. So there's no way to take something as a gamble. So if you're going to take something like this, you know, to come straight down, also you got to realize that this might also just come back up during that empty section, and give you the second leg here in the beginning of the US session to come back down.
Yeah.
And so if this is, so think about it like this, is it out of this pair, is this the only pair that has something that's actually tradable out of all the other pairs that you're looking at? You know, because this may be GU, but maybe GC has a different setup that's the same but looks better.
Right.
Or maybe GJ has a better looking setup. Just because it's pound USD doesn't mean that you have to trade the pound USD.
Right.
You know, look at the other crosses to see, you know, which one actually has the best setup. Because the one that have the best setup and the best looking setup are the ones that you're going to feel more comfortable taking. And I mean, that's the whole point. All right, so this one here, you have basically the price coming straight down. And then you can see price basically creating higher highs, higher highs, higher highs. So this is probably going to end up being, let's say you had this W here going up. On the next day coming up, you may have some sideways movement, and this actually looks like it's potentially like a transition. Like this might be peak formation low, because this is Sunday, Monday. This is Tuesday. And if Tuesday has 1, 2, 3 hits to that low, you're basically talking about like a Tuesday reversal, you know? So then the next day you might have sideways movement, or you'll have sideways during Asia come back down and take like a type 1 going back up. So all these EMAs, the 50 is already here, the 200 is already here, and basically you're taking a trade back up to like, let's say the 800. So it's like a whole transition that's happening. And so on the TDI, this may come back up actually, and you might get a better setup. All right. So any questions on this one? All right. So this one here, what, type 1 pins to the 200, and you already have the movement happening. So does everybody see the divergence on this one?
Yeah.
Yeah.
Creating, this one's
Yeah.
second leg was higher than the other one. This one's second leg was lower. So that's a nice little trade there. Pins to the 200. On the bigger time frame, you know the trend is down anyways, because this is a 50 EMA on a 4-hour chart. This is a Wednesday. So if this is a Wednesday and you just had this happen on Tuesday, can you tell what kind of cycle you're in?
Yeah, be a normal cycle, right? I mean, so far. What is that, Tuesday?
Is it downtrend?
This is Tuesday. This
Tuesday,
is Wednesday.
Wednesday.
Sunday, Monday is over here.
Right.
So if you had this kind of a move on Tuesday, came back on Wednesday, and then you see that this is a bigger 50 on a 4-hour time frame, this should tell you that you're in a what?
Downtrend?
Downtrend, right? So you're in a trending cycle. Okay. Because remember, on Tuesday we had a strong move down straight across, and then Wednesday we just peaked to here. This was this line up here is previous week's low. So you're already passing the previous week's low. So that low from the previous week is over here. So you're already starting a downtrend. So this whole cycle is a downtrend cycle that week.
Okay, Mark, how would I know? I mean, because sometimes does the midweek reversal happen on Thursday? Is it just because it went below the previous week low?
Yeah, so for you to have a midweek reversal, so the midweek reversal would happen on a market maker cycle. Right? So that's when you would have a false move Sunday, Monday coming down, and then Tuesday you'd move sideways, you'd pin that low that happens Sunday, Monday, and then you'd rise the whole day. Wednesday you go across, and you could either spike on Wednesday and then move down on Thursday, or you just move sideways Wednesday and spike it on Thursday and have the midweek reversal on Thursday.
Okay, gotcha.
So just the way that you would know that you're in a market maker cycle is by what happens Sunday, Monday, and Tuesday. If you got a false move Sunday, Monday, and that reversal comes on Tuesday the whole day, where it's not just one session and reverses, but the whole day actually going up in one direction, then you're going to be in a market maker cycle. So you should expect Wednesday consolidation, and then either making the high of the week on Wednesday, or just straight consolidation across till Thursday to make that high. and then you get the reversal on Thursday's London session,
Okay.
and then you just drop for 2 days straight.
And that's how you catch the multi-session M's and W's is with the market maker cycle, right?
Right. Yes. Yes. Yeah, because if you're in a trending cycle, right, you got basically like one opportunity to get into that. That's typically on Tuesday. And then on an accumulation cycle where it's like this, I mean, all you're doing is basically trading patterns that are off support and off resistance.
Oh, got you. So still M and W patterns, but off of support and
Yeah, you're
resistance.
still trading M and W's just off of the top and the bottoms.
Okay, gotcha. Okay, I was wondering. Okay.
You know. But this is let's see, type 2 London price rejection by the market line here. So basically saying the market sentiment is getting rejected here on this yellow line. So would this be a good example to use as a confirmation for this trade? For this type 2 setup up here? Would this help you confirm that?
As far as divergence goes, or just
Not even divergence, just does this help you at all? Confirm this trade.
This is at the 50 baseline, right? On the TDI?
The 50 baseline is this here.
Yeah. So, okay. I don't think so.
yeah,
You don't
because
think
there's
so?
an M. There's an M or no?
I mean, there's the M is like really jacked up. You know what I'm saying?
Okay. Okay. Yeah.
So it's not the best, right? If anything here, you're using basically the fact that this is what is this? This is Sunday, Monday here, and then this is Friday, right?
Oh, okay. Yeah.
So if that's Friday here, what are we doing during the Asian session? Testing that high. Here's that high. We don't go anywhere near it. We create a type 2 setup. What is this creating on Sunday, Monday?
Was that the false move?
The false move, right? So this is creating the false move,
Oh,
right? So essentially what confirmations can you use on this is the pattern you can use, obviously. It's in the right timing. And then what kind of cycle is it in? Well, we don't know, but we can see that basically off of the, this is the 200 EMA here. We don't even see the 800. So the 800 is like down here somewhere.
okay.
You know, so we know that there's basically an uptrend that's happening here.
Right. Oh, gotcha.
You know, so then in that case, if we have an uptrend that's happening and we create basically a peak here, we go back up Sunday, Monday to retest it, we're dropping for that day.
Yeah, that could be a peak formation high.
Right, exactly. So this could be basically like a multi-session M. You know, if that is a multi-session M like this, then you have an interesting scenario to see what happens during this Asian range going into Tuesday. Because if this is a multi-session M, right, and it happens on Sunday, Monday, yeah, this may be a false move. But if this is a multi-session M, then you're basically going from an uptrend, and now we're going to a downtrend, right? So then if you're doing that, what can you possibly expect on Tuesday if you're starting a downtrend?
Well, to continue, right?
Right. So you'd expect like a false move.
False move up and then break down.
And then break down. You know? All right, so there's a type 2 London. And then here at the bottom is price rejecting the market line here. So basically saying by the time this comes out, well, let's do this. Yeah, so you see how basically this, when the second leg of the M is created here, you see how price, the green line is already below down here. So it's already like working its way down. You know what I mean? Do you
Yeah.
see that? So that second, this right here is that second leg up here. It's already halfway down and it's already past the market sentiment basically. All right, so this one here, type 1. This one's pretty easy to see, right? You get a type 1 setup up here, and then you're already in that sell zone up here,
Oh yeah.
and you get the M up here. Anybody using TradingView that uses that indicator, that 4XL indicator for the EMAs?
Yeah. I am.
Yeah.
Do you notice that it's gone now?
No, it's still on my chart.
Still on my chart.
For some reason, like I accidentally erased all my indicators, and now when I go search for it, it's no longer there.
That's weird.
I know, who was it? Kevon had the same issue where she couldn't find it either, and she lost it off her pairs, and she couldn't find it either. So we had to find another one. But yeah, very strange that just disappeared. I couldn't search for it.
Oh, what other one are you guys using now? Just in case.
One that's called 5 EMA.
5 EMA.
Yeah, if you do a search for like 5 EMA, there's like 3 or 4 that come up, and you can change the settings on it, because the one that comes, it comes as like a 50, 100, 20, 200, and 800, I think it is. You can just change the settings on it or whatnot. But yeah, so this one here, type 2 London session here, you get a nice W there, and then nice confirmation here with a W. Again, notice how the W here, the second leg, is higher than the first. Really, really interesting telltale sign that it's going to go higher, or that price is going to go higher, essentially. So really good telltale sign. Same thing here. Nice little W here at the bottom on the TDI. Multi-session between the London and New York session, all the way back up. Nice little trade there. Let's see. So here we have we got bullish divergence here. So basically have price going down, TDI is going up. So you got basically first leg here, second leg here, and then you're going for the rise. If you miss this trade, you get what? A continuation trade out of New York. You see that?
Yeah.
So continuation trade out of New York if you miss this trade. So you're not at the top, you're not at the bottom, you're literally in the middle. You're in the middle, well, you're looking for a continuation. Let's see, this one here pins to the 50 EMA here. I believe this is one. Yeah, we talked about this one. This is last week, isn't it? Euro AUD.
Oh yeah, I do remember that one.
Yeah, we talked about this one. This happened on Euro AUD, Euro NDD, same thing. But same thing here. Basically get a rejection from the market sentiment line, the yellow line here. Working its way down. Let's take a look at some different examples here. So here, type 3 setup, pins to the EMA, the 50 EMA. You can see you get a nice M formation here at the bottom. And then also it's doing the same thing, pinning to the top of the blue Bollinger Band here, and then also to the 50 even line on the EMA, on the TDI. So it's a good confirmation there. So on Monday, what we have here, so you got price pinning to what? The 800.
Yeah.
2 legs here. Notice how the second leg on the TDI is lower than the first. See that? And then you have this one going higher, this one going lower. There's your TDI used for confirmation there. So you got pins, you got 2 legs, an M formation, pins to the 200, or I'm sorry, pins to the 800, and then you have divergence on the TDI as well. So you got all the things there essentially to take a trade, to confirm.
Yeah, the only thing I don't like about that is the volatility is kind of, it's in a narrow range there. It starts to open up. But
well, this range here is actually 35 pips. Right, so this is the Asian range is 24 pips, right?
okay.
So this looks really small because the chart squished.
Yeah, and if you were to expand that down there, there would be some more separation.
Yeah. So that's why the chart looks like that. But
okay.
See this one here. Same thing. The chart's pretty squished up, so but still a 19 pip range. You basically get type 2 setup. Not really. This is more like a type 1 setup actually. And we're above all this stuff too.
But it doesn't look like a divergence there.
What's that?
On the TDI, it doesn't look like a divergence.
Well, on the TDI, you basically have price that keeps going lower, but you basically have sideways movement until here. By the time this happens, though, if you look on the TDI, by the time that you're seeing that, you can see basically the TDI has moved, creating basically lower lows. You know what I mean?
Okay. So we're not just looking at the last 2 highs. We're looking at the whole range. That's for London. Not just the circle parts.
You're not just looking at this, right? I mean, this is your entry over here because you're beginning of the New York session.
Okay.
This is the beginning of the box here in the New York session. Does that make sense?
Yeah, it does.
That's the beginning of the New York session here. So you basically would have how many hits to that high on a type 1? You got 1 hit here, another hit here. That high is staying because it wasn't broken.
Yeah.
The high was never broken. So as long as the high is not broken, and you see this keep continuing to move down, creates lower and lower.
So would it be wrong? Oh, sorry.
No, go ahead.
Could you just take it back to the last?
What about it?
I can't see it on my side yet.
Yeah,
would it be wrong to get the to take the entry on the London session, the second pin to that high?
on that particular example, that second pin during the London is literally the last candle in the box.
Yeah, yeah.
So I
Yeah,
wouldn't take
yeah.
that. No,
Okay.
no, you wouldn't want to take that, because by the time the 7 o'clock, that 7 a.m. to 8 a.m. Box, okay, this gap here that exists for an hour. If you're taking this candle here, this last candle, as, let's say, a type 1 setup or whatever, that last candle has a very good chance of doing nothing but moving sideways or moving back up to retest the high.
Okay.
So basically, all you're doing is you're limiting yourself. You basically be taking yourself out possibly early out of the trade, because how many candles are in an hour? How many candles are from 7 to 8? How many
4.
15-minute
On the
candles?
15, on 15,
Yeah.
That's
So there's how many candles?
4.
4, right?
Yeah,
So there's 4 candles that make up 1 hour.
yeah.
So let's just say that you go in, on this candle here as your entry. If you don't get the move, literally 2 candles inside of the new box, your 6 candle rule goes into effect and you take yourself out of the trade,
Yeah, yeah.
right? But the very next candle could be the one that breaks. Do you see what I'm saying?
Yeah,
So because you're entering on this candle here, you're basically taking away the possibility of waiting, because literally you would need this candle, this move essentially to happen 2 candles into the New York box,
yeah.
So, and by the way, if for any reason you guys have these indicators on TradingView, make sure that the settings have the boxes from 3 to 7 and from 8 to 12. So just make sure that those are the settings for the boxes,
EST.
because I think the default is 3:15 to 6:30 and from 8:15 to like 11:30. So if you don't know how to do that, how to change those settings, I'll just show you real quick, because you don't want to mess with the other settings on it. So once you have the indicator here, you just go to the settings and then you go to inputs, and then the times that we're talking about are essentially, if you scroll down, you'll see where it says London start hour. You want that to be 3, and then the end hour 7. Once you do that, you just scroll down to the New York and do the same, 8 to 12. That'll just give you the maximum coverage possible for trade entries.
Let's see what TradingView
Okay.
come up.
What?
All right, so let's go ahead and take a look at this one here. So this one here being a type 2 W here, second leg inside of the London box here, you can see you get the same thing here on the TDI. So you can see you get the same thing here on the TDI right here. So you get a W going back up. So there's your confirmation. Where is this one here? Very similar. You get a false move here. Basically, you get just a railroad track here. on to go straight up. And you kind of get a W here to see it. Now, if you stretch this chart out, or the TDI on the side here, to make it bigger, and this to make it bigger as well, you may see it better. So, let's see. All right, so this one here, you have a multi-session W here. First leg here comes up, second leg you get in New York. Now look what happens here with the first leg is all the way over here. Second leg is all the way over here. But the most important thing about it is look how the TDI has the second leg higher than the first, right? So it's just showing you that it's going in an uptrend, right? So that should give you very good confidence of taking a trade. And so this is going down, right? And this is going up. And that's the divergence that we're talking about. This one here, type 1 setup, you can see second leg here is that little pin bar. And then look, you get the W on the TDI also in that buy zone down here. It's a very similar setup as well here. You get second leg right here inside of the box. You see the second leg on the TDI is basically higher than the first. Let's see. So this one here, you're pinning to the 200 EMA. You can see during the London session, what happened. He did nothing but go sideways. Remember that if you go sideways during London and you see this crap, you don't trade this crap. You wait for the U.S. session, because the U.S. session is what's going to give you the move that you're waiting for. So if you see stuff like this, you avoid this like the plague, because there's nothing there. Just wait for the U.S. session or go to a different pair. It's not worth trading. This one here, you can see the divergence here as well. You have price making higher highs, and on the TDI, it's making lower lows going down. So that's the divergence that you're wanting to see. This one here, you really don't get anything besides the pin to two things: the middle of the range, and then also to the 50. Okay. You do get on the TDI, you just, because it's only one pin, one bar, you only get a nice little move like that. And it goes where it goes to the 50, and then it turns around. So this wouldn't be like the best example of using the TDI. All right, so this one here, you'd have the first leg is here. The first leg is, damn, this freaking thing is crazy. First leg is here, second leg is here. You see first leg on the TDI, second leg comes up and it's higher than the first. I mean, it's like a broken record, same thing over and over and over again. So the more that you backtest, the more that you see this stuff, you just basically are implanting it into your brain over and over and over again of what you're seeing. Same story, different day. That's all it is. So this one here, it's kind of squished, but this is actually 34 pip Asian range. And then you get nothing but a straight move sideways on the middle of the range. Well, why do you get that on this? The only reason you're getting that is because of this 50 is going straight through it and it's holding price from getting to the top of the range. Okay, and you finally have a quick break, and then there's your candle right here to get into the trade. This whole candle is about 30 pip candle right there. You see how on the TDI, it's basically doing the same thing, going straight across on the 50, and then all of a sudden you get a poke, and then a straight drop. All right, so this one here is actually a type 3, not a type 2, because they got stuck in the middle of the range. This is the middle of the range here. This is the top of the range. All right, so you had a star pattern right at the middle of the range. So if you notice, this came straight across, came down, created a W to go back up like a type 2, got stuck, created a star pattern, and went down. Okay. This on the TDI, this right here on the TDI doesn't help you confirm this trade. Okay. What can help you confirm a trade is down here. If you look at this, when you see this right here, these 4 bars that are almost identical in length like this, if you turn this over to a line chart, I guarantee you that's a W on a line chart right here. Okay. So you see the TDI is all the way down here, way below the 30. And you see it come up. Now this range is about 75 pips, so I'm going to assume that this little four candles here, maybe 20, 25 pips for that candle. I'm surprised it actually didn't go to the 50. So here we go, type 1. Here's the Asian range continuing to create higher highs. And then you can see all the way from back here, it just keeps going lower and lower and lower. And then you can see the M here, which is also here. Okay. All right, and then this one here, you can see the W on the TDI. Notice how on the notice this real quick on the TDI. You see how this W came pretty much even, right, to the bottom here, which made an even W. Notice how on the chart though, this W came basically one leg longer.
Yeah.
Okay. So you wonder why on the chart, when you have a W that's like this, on the TDI, it shows up like this. You get what I'm saying?
That's a divergence, isn't it?
What's that? This right here?
No, yeah.
No, the divergence would be really
No, on the W, and the the W you just drew.
on this one like this.
Yes.
Yes, yeah. If you get that W on the TDI, yes, it would be divergent, especially if you're going down like this on the chart. Yeah. All right. So, what questions do you have about TDI?
It's a lot of lines.
It is, yeah. Yeah. It is a lot of lines. If the TDI is confusing to you, take it off. You don't have to use it. It's there to help you confirm. It's not there to help you take trades as far as make trading decisions. It's just there to help you confirm things.
It looks
So-
like a really good one because so all we're looking at is the green line, right?
Well, it's not only the green line, right? The orange line is also what we call the signal line. You know, the yellow is the market, the overall sentiment of the market, you know? So, but yeah, there's a whole bunch of different, you know, examples I went through that you could basically see how you could potentially use the TDI. And there will be times that the TDI will be wrong because it's not perfect, right? Nothing is perfect. So, but just use it as a way to confirm things.
Yeah, I got a question, Mark.
Yeah.
So the signal line, is that the same thing kind of as the 13 EMA as far as the crossover?
You can think of it like that. Yes.
Okay.
Yeah, you can think of it like that. So like, here, let me load up a chart real quick. So we can look at an actual trade here. So let's look at this one here real quick. So if we go back, let's say to the moment you had this candle. So now you're closed, you have a candle that's closed below the 13, right?
Right.
The green, which is the price line, right? And then the red is the signal line. So you see how the green crossed the red as well.
Okay, yeah.
You know, so just make sure that if you're doing that, that they both match. You know what I mean?
Yeah, okay.
But you're at the end of the day, remember that this is just to help confirm things. This is not to help you make a trading decision, or this is not to say, hey, this just crossed, let's just get into the trade now. You know?
Right. And we're still waiting for the 513 crossover signal too, right? That pops
Yeah.
up.
So there's two ways you can get into the trade. You can wait for the signal, the 5 and 13 crossover. Would be, let's see, on this one, it'd be that candle. No, the next one. That candle there.
Okay.
So you're getting in, let's say, in this case, it's like 4 candles after this one.
Okay.
Right. Now, most of the time, when the trade setup is correct, okay, and you have a second leg M, second leg W, right, and you're getting in, let's just say that you're just getting in after a candle closes above or below the 13 EMA. It's basically the candle before the crossover happens. So if you're going to use the close of the candle below or above the 13, typically in most scenarios, you're getting in one candle sooner than the crossover of the 5 and 13.
Okay.
Okay. Now, with that being said, if you're using just the close of the 13, or you know, the close of the candle below or above the 13, keep in mind that because you're not waiting for the crossover, you're going to incur some false entries or losses, call them. You get what I'm saying?
Yeah.
So just keep that in mind as well.
Okay.
But so this is where the back testing part comes into play, because if you're back testing your specific pairs that you're trading all the time, you're going to know the behavior that pair does over and over and over again. So you're gonna feel safe essentially taking that trade because you know that pair.
Right. Okay.
You know. Cool. Any other questions about anything? No other questions. Alrighty. Well, we'll go ahead and call it a night here then.
And what are we covering next week, Mark?
Next week, we're covering money management, risk management, and trading plan.
All right, thanks.
Yep.
Thanks, Mark. Have a good one.
All right. All right, man.
Yep. See you, Mark. Have a good one.
Have a good one. We'll see you guys on Tuesday.